In today's video, I'm going to go through a case study of an investment property that's currently for sale in the city of Welland in the Niagara region. This is a property that's listed for sale for $500,000. It currently has 2 units and it cash flows approximately $650 a month based on my estimates. So let's get into it. So we're looking at 52 McAlpine Avenue South. So this is located in the east end of Welland. This is a neighborhood I would consider to be sort of like a B neighborhood, not the greatest of areas, but it's a solid area to find decent tenants. You're not in the rough neighborhood, so you're still in a decent part of town. We have other clients that own rental properties on this same street, and they have had some good success getting good tenants. So the property is a bungalow style, currently has 4 bedrooms, 3 on the main floor, 1 in the basement, and it has 2 washrooms. So there's a 3-bedroom main floor apartment and a 1-bedroom basement apartment. Property's been on the market for 35 days, and actually the story behind this, they have a tenant on the main floor who's leaving at the end of July. So as a result, you'll be able to get the property vacant, do some cosmetic work upstairs. I think it's already in decent shape, but it may need some painting. If we take a look at the photos here, the kitchen is in decent shape, but it may be an area to invest some money into if you really want to bring it to a higher end. Bathroom looks fairly good. There's a washer dryer already in one of the closets in one of the bedrooms. And this is the basement. So the basement actually looks very recently done, already has its own separate laundry, flooring done, painting done, looks to be in very good shape. There's already a kitchen with a dishwasher in the basement and a really nice washroom. So the basement apartment, and this is the bedroom. So I think the basement apartment will rent fairly quickly. It looks very nice. And the upper level, if anything, I'd probably paint it and just bring it up to a good standard. You know what, even the paint looks pretty good. So it'll be interesting to see once the tenants move out, how rent ready is it right off the bat. The listing says it was built in 1977, great year, or great decade, I should speak. The 70s and 80s are properties that I really like. It may have aluminum wiring if they haven't rewired it, but we've bought plenty of properties with aluminum wiring. It's not something that I would worry about too much. 2 parking spaces. It is a fairly small lot size. Let's see here if we can pull up the lot size. Yeah, so it's about 30 feet of frontage by 100 feet in depth. So nothing huge, but for its purpose as a 2-unit property, I think it goes a long way. So before we run into the numbers, the one thing to note, this property probably isn't a legal duplex. So the reason I can tell is a property like this, you can see especially the windows in the basement, they're not necessarily big enough to meet the light requirement or the egress requirements. So if you were to legalize it, there's already drywall in the ceiling, so you'll probably be able to get away with keeping all the existing finishings, but you will likely need to add a couple of windows to really meet the light requirement. The good part, I believe the kitchen should be separate. So we'd have to have an architect check, can we remove the kitchen from the light requirement? And actually, upon walkthrough, it may be worth considering if the space is big enough to parcel out a 2nd bedroom in the basement. That may be something to consider if the space allows for it. It is a 950 square feet basement, so there should actually be space for it, but again, those are just considerations. All right, so let's dive into the numbers here. So list price at $499, they recently reduced to that price. I think it's a bargain at that price. If you wanted to negotiate further, you can obviously, but I wouldn't sort of mess around and try to go back and forth and then have another offer come in and just take the property. So I think at this price, it is fairly priced. Let's see here. So your down payment, roughly 100 grand, 108 grand. Your mortgage amount, if you go 80%, today's prime rate is prime Today's variable rate mortgage is prime minus a half, so about 4.2%. I'm estimating you can get about 1900 from the upper level and about 1400 from the basement. And these numbers are inclusive because it probably doesn't have separate hydro. You can look into doing separate hydro, but this is the base case scenario with the least amount of work done. So this is basically buying the property, renting as it is, and maybe setting aside a budget to legalize the basement at some point in the future. So your mortgage payment with this interest rate, with this mortgage amount, is about $1948. Property taxes $208 as per listing. Insurance and utilities, you have a $650 monthly cash flow. And if you look at your return on investment, so you're putting in about $108,000. If you have the cash flow, the mortgage pay down, and the equity appreciation over the course of 5 years, you can look at getting a return about 24% compounded annually over 5 years. And over 10 years, that does drop to about 18%. But you can see here the profit over 5 years is $218,000 and close to $500,000 over 10 years. Now you can say, hey, the cash flow doesn't include property management, doesn't include maintenance and repairs. Let's remove it altogether. Let's assume that this cash flow is purely your buffer, your emergency fund. It's just sitting in a bank account waiting to be spent on the property. So if all you get were the mortgage paydown and the equity appreciation, you still have a very healthy return in 5 years of 21% and 16% over 10 years. Now, keep in mind, we are putting in a 5% appreciation year over year. The next 1 or 2 years is definitely going to be an uncertain time. So it may be the case that this 5-year number does not meet. However, it is more than likely that the 10-year figure is going to meet with our expectations. So hope you found that helpful. This is a deal that I think is worth strongly considering if you are in the market to buy an investment property. And again, we are in uncertain times, so you want to make sure that your personal finances are in a good place. If you already have investment properties, you really look to see, hey, are your current properties cash flowing? Set aside a buffer if your payments are going to go up. And if you are in a position financially where you can make a purchase, then this is definitely one to consider. Hope you have found that helpful. For those of you on our hot deals list, I'll be sending this out along with the profitability calculator. If you're new to us, if you're not already on our email list, check out our beginner's guide to investing in the Niagara region. Once you sign up for that guide, you'll have the option to join our hot deals list where you can get access to properties like this on a weekly basis. Until next time, all the best.